Dan, I've got to say, real treat for all our viewers today. You're channeling your inner Roger Moore circa 1971. You're looking very dapper, sir, I've got to say.
Thank you very much, Steve. Look, as you pointed out, we are likely to see a production cut from OPEC and its allies tomorrow as the group meets to discuss the response to the coronavirus impact, which has been hugely consequential for oil demand. Let's get you some fresh analysis on Squawk Box this morning. Very pleased to say that Amrita Sen joins us now. She's from Energy Aspects. Amrita, tell me, what are these producers going to do? What's the most likely scenario coming out of the meeting tomorrow?
I think our base case is still to assume that they will be able to put together a cut. Probably 1 million barrels per day or so on either side. Like, I think the Saudis are trying to push for a cut that's more than 1 million. We've got Libya offline. There are sanctions on Venezuela that should take another 500 or so off the market in the summer. So together, that number should mean that the demand losses that we are seeing, the whole point is they want to keep inventories in check in Q2 and just not allow a huge build-up that takes them months to run down. The biggest aim is to prevent contango. But, you know, Russia's always going to be difficult, and I think that's what we're seeing right now.
So how is Saudi Arabia going to get Russia on side? And is there a real risk that they might walk out of this without a deal?
I think that's the really tricky bit right now. I think all of us know that at some point the OPEC Plus deal is not going to be exactly the same as it is today. It will become a long-term cooperation, but I don't think any of us expect that to be this meeting. There's a lot of focus in Russia, not just on shale, because I mean the shale industry is really struggling, and their argument is we're so close to quote-unquote killing them. I think, well, that's a mistake. I mean, shale will always be there. Of course, growth is slowing dramatically, but Russia's also more comfortable with lower oil prices compared to the Saudis. So, I mean, look, this is, as I call, beyond politics, right? There is definitely stuff going on behind the scenes. This isn't just about oil. And I think that's where this deal has to be done. Effectively, there is something Russia wants that Saudi Arabia will have to give, because there does seem to be, the Russians really are holding out more than usual this time around.
How would you characterize the impact that coronavirus has had on the demand profile? We now have analysts at Goldman Sachs and IHS saying we could see demand actually flipping negative this year.
I think that's very possible. I mean, we've got like very small growth for the year. The main reason is I'm very reluctant to change our second half profile. First half, we are assuming oil demand is going to fall by like 1 million barrels per day. But not just China. Of course, China is recovering, but now is the rest of the world, right? Everybody's quarantining, or the schools are being shut. But it's really the second half, people are expecting stimulus. I mean, the Fed cuts are less relevant, but it's a Chinese fiscal stimulus that we have to look out for. And so we can get a rebound. It really depends on the duration. This is OPEC's problem as well. Nobody knows the magnitude or the duration of this problem.
So coming up next, when you look at the overall impact on the oil market, is it fair to assume here that if OPEC fails to cut production beyond 1 million barrels, that we will see a disappointment in terms of pricing and overall market reaction?
100%. I mean, we've already seen Brent test $50 last week. I think people are expecting an OPEC action. I would say 1 million is probably priced in right now. Anything less or even around that, we'll sell off. From OPEC's point of view, they cannot expect short-term upside. Sentiment is extremely weak, even if they deliver 1 million. This is just about ensuring the physical market is tight and we don't go into contango, and so that we can get future upside. If they fail to deliver, I think we'll test 30s.
What about some of the other producers within the group as well? While it seems like Russia has been hesitant to sign on, it does look like at this point, at least from what we understand, that the UAE and Kuwait are willing to play ball.
Yes, I do think GCC understand the importance of inaction. And, you know, I keep going back to 2014, 2015. You had 2 quarters of huge builds, above average builds, and that took them 2 years to run down. I think from their point of view, it is very much, they just don't want the curve to flip into a contango, which then leads to more storage, and that will take them years to run down. All their hard work will be undone. And that's why I think they're really focused on doing something dramatic right now. They can always reverse this in the second half if required.
What about the duration? And that's an important point that you raise. If they do deepen production cuts today, how likely is that cut going to stay in place towards the end of the year?
I think what the plan is, quote unquote, is extend the current deeper cuts, which is a 2.1 million barrels per day for Q1, through to end of the year, and do an additional million or somewhere around there for Q2. Russia's, of course, saying we'll just extend, and that too just for Q2, right? So they're poles apart right now. But I do think think there is a big push to at least extend the current deal right through year end. They know that the demand scenario or the scenarios are really weak this year, so they have to continue with the cuts this year.
Coronavirus has obviously been the main narrative in the oil market for the first quarter. As we come into the rest of the year, is there a real risk that the market is also underpricing perhaps the impact of a phase 2 trade deal and those likely negotiations that are going to take place throughout the course of the year? Is this a risk that we're not paying attention to?
Oh, completely, but right here, right now, it is panic, right? I think that's part of the problem with regards to what the market is focusing on. I think the phase 2 deal, but also it's the US elections. What's going to happen there? And we've not talked about the supply side, and I think one of the big things we've seen, despite the price of oil falling, the physical market hasn't really dropped too far because Libya's offline. None of us are talking about that, and everybody expected it to be back in days, and it's been weeks, well, months now, month and a half, and it could last for longer. So there are lots of moving parts right now. But yes, on the demand side, I do think right now it's very, very negative. But whether it be the fiscal stimulus, whether it be the phase 2 deal, no one's even thinking about that right now.
That's right, it's all about coronavirus.
Yes.
All right, Amrita, we'll leave it there. Thanks again for joining us today. That's Amrita Sen there from Energy Aspects, guys. It is clear that OPEC and its allies are going to cut production, but what this looks like really remains to be seen. We'll continue to follow it for you.
Yeah, excellent work, Roger. Dan, thank you very much indeed for that. God, I've got to get that Roger Moore thing out of my head. Right, coming up on the